Good morning, everyone, and happy Monday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. All right, guys, welcome back. Thank you all so much for being here, and happy Valentine's Day. Of course, this morning we'll be taking a look at exciting stock market news, notable earnings reports, and the morning's biggest gainers and losers. To celebrate Valentine's Day, TipRanks is offering 30% off their premium and ultimate subscriptions. So if you've been thinking of unlocking some fantastic research tools, now is the time to do so. Head over to tipranks.com or follow the link in the description down below. Now let's get right into this morning's exciting stock market news. U.S. stock futures are currently in the red this morning. Dow futures are down 0.73%, S&P 500 futures down 0.83%, while Nasdaq futures are down 1.1%. Twitter has signed an accelerated share repurchase agreement to buy back common shares worth $2 billion. Twitter's CFO said this significant buyback is an important demonstration of our conviction in our strategy and our commitment to delivering shareholder value through disciplined capital allocation. Buying $2 billion of our shares in the near term with the flexibility to buy another $2 billion over time enables us to balance our long-term strategy with returning capital to shareholders. The Twitter stock is currently rated a hold with an average upside of 31%. Cisco has put a $20 billion acquisition offer on the table for software maker Splunk. The $20 billion bid would be Cisco's biggest acquisition, eclipsing the $7 billion it paid for Scientific Atlanta back in 2005. The proposed acquisition would build on a strategic data security partnership between Cisco and Splunk. It would also affirm Cisco's increased focus on software, having reiterated plans to introduce new financial metrics as it looks to grow its software business. The Cisco stock is currently rated a moderate buy with an average upside of nearly 22%. Shares of SENS plunged last week despite the positive news that one of their glucose monitoring systems received FDA approval. Their stock fell over 33% on Friday after the approval of the SENS E3 was announced. With the launch of this new glucose monitoring system, SENS will be able to offer patients a fully implantable third-generation sensor with proprietary SBA technology to enhance sensor longevity and enhanced sensor wear duration of 6 months. A removable smart transmitter will be made available for discrete on-body vibratory alerts and data transmission to a mobile app where glucose values, trends, and alerts are displayed. With very opposite price targets, the SENS stock is rated a hold with an average downside of 0.8%. And Lockheed Martin has terminated its agreement to acquire Aerojet Rocketdyne Holdings after facing different regulatory hurdles. The $4.4 billion deal was announced back in December. The move comes following a U.S. Federal Trade Commission lawsuit seeking a preliminary injunction to block the acquisition. The regulator believed that the deal will likely allow Lockheed to control the critical propulsion inputs supplied by Aerojet by denying, limiting, or otherwise disadvantaging competitors' access to inputs for various weapon systems. Lockheed said that the acquisition would have benefited the defense industry through greater efficiency, speed, and significant cost reductions for the U.S. government. Their stock is currently rated a moderate buy with an average upside of 3.8%. Now moving over to notable earnings reports. Monday will be quite quiet for earnings, but tomorrow on Tuesday we'll see some big names reporting like Airbnb, Roblox, Upstart, and Viacom. On Friday, we heard from Under Armour. Their shares dropped 12% despite posting better than expected results for earnings and revenues in their Q4. However, the company's weak Q1 guidance overshadowed the positive results. They reported Q4 adjusted earnings of 14 cents per share, which was 7 cents higher than analyst estimates. Their quarterly revenue climbed 9% year over year to $1.53 billion, also surpassing the street's estimates of $1.48 billion. Their stock is currently rated a moderate buy with an average upside of 52%. And we also heard from Cleveland Cliffs. Their stock was down nearly 10% following weaker than expected results for their fourth quarter. Their earnings stood at $1.69 per share, lagging behind analyst estimates of $2.11 per share. Total revenues came in at $5.3 billion, missing the consensus estimates of $5.7 billion. The company did report revenues of $2.3 billion last year. Their stock is currently rated a moderate buy with an average upside of 51%. Now let's take a look at which stocks are this morning's biggest gainers and losers. Our biggest gainers this morning are led by Splunk following the news of the $20 billion acquisition offer from Cisco. Trading under the ticker SPLK, the stock is currently up over 8%. They're followed by the Sasol stock under the ticker SSL. Their stock is up over 5% with no distinct news. And the Goldfield stock under the ticker GFI. Their stock is up 4.9% with earnings approaching on Wednesday. Our biggest losers this morning are led by the Cheesecake Factory. They have their earnings coming up tomorrow and have recently been downgraded by some analysts. Trading under the ticker CAKE or CAKE, the stock is currently down 8.5%. They're followed by Denali Therapeutics under the ticker DNLI. Their stock is down at nearly 4% after the FDA announced that their IND application to begin clinical testing was placed on clinical hold. And Premier stock under the ticker PINC. Their stock is down 7.5% now, cooling off from gains last week following exploration progress at their Zimbabwe lithium project. So that is going to be everything for Monday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. If you made it to the end of today's video, make sure you hit that thumbs up button and say good morning in the comments down below. I always love hearing from you guys. Thank you all so much for watching. Have a very happy Valentine's Day, and I'll see you back here next time.